Hello, my name is Simo from Investment Research. Welcome everyone. It's December 4th, 2025, and we're here for our daily check on SoFi Technologies. And look, today I want to talk about what's happening right now with the stock, where we are in terms of price action, and honestly give you my take on whether this is a buy, hold, or maybe time to take some chips off the table. Also, by the way, today drop down from $29 to $28 is just a correction, nothing to worry about. So before we get into details, let me just kind of set the stage here. We just had SoFi's CFO, Chris Lapointe, speak yesterday at the UBS Global Technology and AI Conference. There's this massive Fed meeting coming up in less than a week. And, the stock's been on this incredible run lately. So I want to walk through what matters right now and where I think we're headed. All right, so let's start with what happened yesterday at the UBS conference. Chris Lapointe basically came out and reiterated that 2025 has been a really strong year. They're expecting to add over 3.5 million members this year, which is huge, and they're projecting about $3.54 billion in adjusted net revenue, which represents around 36% growth. That's not slow growth, that's real momentum. Now, here's the thing. The stock right now is trading around $29 to $30. And, last week alone, it surged about 18% and closed just shy of $30. So the big question everyone's asking is, do we get follow through here, or do people start taking profits? Because let's be real, when you've got a stock that's doubled year to date, at some point people are going to want to lock in some gains. And look, I've been watching the price action pretty closely. Just a couple days ago, the stock was up over 4% intraday, hitting around $30.27. But then, it pulled back a bit. And honestly, that's normal after a big run like this. What I'm seeing is the stock is trying to establish $30 as a new floor. And, if it can hold above that level, that's actually pretty bullish. But if we start breaking below $28, that could signal some profit taking is coming. Now let's talk about something really interesting that just happened. JP Morgan just raised their price target on SoFi to $31 from $28. And that's meaningful because JP Morgan isn't just talking, they're actually putting real money behind this. They increased their stake in SoFi ninefold to over $1 billion recently. So when I see institutional money flowing in like that, it tells me the smart money sees something here that's real. But here's where I want to be totally honest with you. The analyst community is all over the place on this stock. The consensus rating is hold with an average price target around $24.70, which is actually about 15% below where we're trading right now. And, the range of targets is wild, from a low of $12 all the way up to $37. That massive spread tells me nobody really has high confidence in their valuation here. So what does that mean? It means the market is pricing in something really optimistic that analysts aren't fully bought into yet. Either the analysts are behind the curve and they're going to start upgrading, or the stock is ahead of itself and needs to prove it. One of those two things is true, and we're going to find out over the next few months. All right, now let's talk about the Fed meeting, because this is happening in less than a week, December 9th and 10th, and honestly, this could move the whole market, not just SoFi. So here's where we are. The market is currently pricing in about an 80% likelihood of a December rate cut. But, this was not the case just a few weeks ago when it was almost a done deal at like 97% probability. So something shifted and the uncertainty has gone up. And what's interesting is even the Fed itself is divided on this. According to recent FOMC notes, several participants are calling for a December cut, while many others are saying maybe we should just leave rates unchanged. So even the Fed doesn't know what they're going to do, which makes this one of the most uncertain meetings in a while. Now, why does this matter for SoFi? Look, SoFi is a lender at its core, right? And when interest rates stay high, refinancing activity basically dies. people with low rate mortgages aren't going to refinance into higher rates. Student loan refinancing, which used to be their bread and butter, slows way down. And their cost of funding stays elevated, which compresses their margins. So if the Fed cuts, that's generally good for SoFi. If they pause or signal fewer cuts in 2026, that's a headwind, and we're flying blind here for another few days because the Fed is in their blackout period until the actual decision. Now, the other big story that keeps coming up, and honestly I think this is something people are underestimating, is the S&P 500 inclusion possibility. And look, according to analysts at Truist, SoFi already meets the formal criteria for S&P 500 inclusion. They've got sustained profitability now, the market cap is there, all the boxes are basically checked. And here's the thing about S&P inclusion that people don't always appreciate. When a stock gets added to the S&P 500, you get this automatic buying from every index fund that tracks the S&P. And that's not like discretionary buying where someone's making a decision. It's forced buying. They have to buy it. And, we saw what happened with Palantir earlier this year when they got added. The stock jumped just on the announcement. So here's my take on the recent price action and why we're seeing this uptrend. There are a few things driving this. First, institutional buying has been strong. JP Morgan's massive position increase is a big deal. When you see smart money institutions loading up, that's usually a good sign. They're not buying on hype. They're buying because they see the fundamentals improving. Second, the revenue guidance has been solid. 36% growth is real growth. And the fact that they're finally consistently profitable changes the narrative. This isn't a growth at all costs story anymore. This is a company that's actually making money while still growing fast. Third, the crypto launch in November is starting to get attention. They're the first nationally chartered bank to offer crypto trading directly in the app. And, if even 20% of their 12.6 million members start using this feature, that's meaningful revenue, that's capital light and high margin. But let me talk about the risks too, because, I'm not here to just pump the stock. At 50 times forward earnings, the market has priced in basically perfect execution for the next year or two. And when I look at the broader lending market, which is only expected to grow 5 to 7% industry-wide, I ask myself, can SoFi really outperform that by enough to justify this valuation? The other concern is if we see any weakness in consumer spending or if credit quality starts deteriorating. Credit card delinquencies across the industry are at 11%, the highest since the Great Recession. Now, SoFi's charge-off rate is only around 2.6%, which is solid, but if that starts ticking up, that's a red flag. So let me give you my recommendations here. And look, this is just my opinion. You got to make your own decisions. If you're currently holding SoFi and you bought it under $20, I would absolutely be taking 20 to 25% off the table right here. Lock in some gains. Don't get greedy. Let the rest ride because the long-term story could absolutely work, but protect yourself. After a 100% run, it's smart to de-risk a bit. If you bought it more recently, say in the mid-20s, I would hold for now, but watch the Fed meeting closely. If the Fed cuts and signals more cuts in 2026, this stock could run to $32, maybe $35. But if the Fed pauses or sounds hawkish, be ready to either trim your position or at least stop adding. If you don't own it yet and you're thinking about buying, here's what I would do. I would not chase it at $29 to $30. You're paying full price for everything to go right. I would wait for a pullback. If the Fed meeting causes some volatility and the stock pulls back to $26 or $27, that's where I'd look to start a position. Buy on weakness, not on strength. The other thing I would say is if you really want exposure at current levels, don't go all in. Maybe start with a half position. Buy 50% of what you ultimately want to own. And then if it pulls back, you can add the other 50% at a better price. That way you're not sitting on the sidelines completely, but you're not overpaying either. Now, what am I watching for in the next few weeks? First, obviously the Fed meeting on December 10th. That's going to set the tone for the market broadly. And SoFi is going to move with the market, but probably more exaggerated because it's got a high beta. So if the market drops 5%, SoFi could easily drop 10%. Second, I'm watching for any updates on crypto adoption. If they start giving us numbers on how many members are actually using the crypto feature, that could be huge. If it's 20 to 30% of members, that's a game changer. If it's less than 10%, the stock's probably going to react negatively. Third, member growth. They've been adding members at an incredible pace. If that momentum continues into Q4, it validates this whole growth story. But if member growth slows, we've got a problem at this valuation. And then fourth, the Q4 earnings report, which should come in late January. That's when we're going to get the full picture of how they closed out 2025, and the guidance for Q1 2026 is going to be critical. So here's my bottom line. SoFi is a real company with real momentum. The institutional buying is encouraging, the revenue growth is solid, the crypto launch is innovative, the S&P 500 inclusion possibility is real. All of that is true. But after doubling this year, the easy money has been made. We're now in that phase where execution has to be absolutely flawless to justify where we're trading. At $29 to $30, you're paying a premium valuation with limited margin for error. My recommendation, if you're in, take some profits. If you're watching, be patient and wait for a better entry point around $26 to $27. Don't let FOMO push you into chasing momentum. And watch that Fed meeting next week, because that could create the opportunity you're looking for. December historically is a strong month for stocks, but this year feels different with all the uncertainty around rates. So stay disciplined, protect your gains if you have them, and don't overpay for a stock just because it's been going up. All right, that's it for today. I'll be back with updates as we get more data. Thanks for tuning in, and good luck out there.